Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for June the 8th to 12th, 2020. So let's begin the video this way. Let's pop some champagne. Why? Well, the Qs are back to all-time highs. Those March 23rd lows are now but a distant memory, and equities continue to go Momo up into highs. So the Qs are the first to reclaim, their highs, and the rest of the indices, the SPY, Dow, the Russell, are making making up some ground quickly here now, as it looks like, as we talked about in last week's video and the week before that, that the all-time highs are a very likely outcome. And the Qs got there first, so they're the first ones to cross the finish line. Although the race is far from over, let's see where we go from here. So we'll talk about the week that was in a few moments here. But let's first talk about the econ calendar and the earnings calendar. Earnings-wise, not a lot of names reporting this coming week. So less than a dozen companies reporting on each weekday this coming week. But a few notable names will be worth watching. It's interesting names. SFIX, a good Nasdaq company to watch on Monday. So good high beta stock name. You got GME or GameStop on Tuesday. Curious to see how that retailer performs. If you want to see a bad-looking chart, pull up that chart. We'll actually pull it up later on, just because it's an interesting chart to see where it goes. We got Lululemon. It's been a high flyer. We talked about that stock. A couple weeks ago, that had hit all-time highs already 2 weeks ago, and it's certainly driven by the fact that people need yoga pants when they work from home. so Lululemon. Let's see how they report this coming Thursday. Now on the econ calendar, we do have a potentially volatile week because we have a couple of notable things. On Wednesday, we have the CPI number on the morning at 8:30, and then you also have the Fed announcement. So the Fed announcement and the press conference at 2 and 2:30 respectively. So that'll be interesting to watch because you do want to see if the Fed changes their narrative around their support for the equities markets and the economy. With the Qs now going back to all-time highs, the economy reopening, do they at all change their language, and does that at all spook traders and investors? Let's see what happens there. And of course, you got to watch out for the jobless claims number. This past week, the jobless claims numbers came in very strong, so it was a big surprise to the equities markets. The employment number came in very strong on Friday, and so a lot of folks were really surprised by that. So there was a lot of upside in those numbers, and we saw the markets fly on Friday. And pretty much every single chart you pull up right now, it is trading on a lot of strength. So you got that jobless claims number on Thursday, which you always got to watch out for, and you got the PPI number as well at 8:30. So potentially market moving volatile stuff before the market opening there. So be careful how you position yourself going into Wednesday, so that you're aware of what's happening on Thursday morning. So with that being said, let's jump into the charts now. And today, instead of going to the VIX first, let's first talk about the SPY, because the SPY, if you haven't seen already or haven't heard, it is pretty much, I'm not over exaggerating here when I say this, but these are the best markets ever. So I'm not exaggerating that, because if you actually just look at the returns for the past 50 days, they are the largest returns ever recorded. So since they've been recording, the returns of the stock market, so this is since the early 50s, you have not seen a bigger 50-day stretch than the one we just had. So as I recall, if you recall, I said we bought them on the 23rd right there. So there's the 23rd. That's a Friday. Notice how we bought them on a Friday. And on Monday, they gapped up, and they trapped all those folks who got short on Friday, who were short. This is classic stuff here, and this is a bullish kicking pattern. They gap up above where they close out and trap everyone. So you got this here, and look at the run. So from here to this sequence here to Wednesday, this past Wednesday, that's 50 bars. So 50 days of trading. Those 50 days of trading yielded over a 40% return for the SPY. So that's how strong of a period it's been for the past 50 days. So no other point in history have we seen stronger returns than these past 50 days. If we include the past, the end of the week, so look, just the Friday's close, 43% return in 52 days. What an amazing turnaround. So let's begin with our SPY analysis. We'll delete that for now. But man, what a run the SPY has had. Again, not over exaggerating when I say these are the best markets ever. So, and again, it depends on if you're a bull. If you're a bear, certainly these are the worst markets ever. But hopefully, if you've been watching these videos, you've been at least keeping on the right side of price. So let's begin it this way. So the SPY, big picture. Here's the big picture, right? Currently, quarterly chart or outside inside on the quarter. Okay, so this bar is still inside of Q2's range. So do we stay inside of Q2's range, or does somehow the SPY manage to break above Q2's high, and then we get that? Sorry, this is Q1's high. Sorry, apologies. Q1's high, and we go Momo up on the quarterly chart. That would be something. We'll talk about what that looks like in a few moments here when we look at the Qs. But for now, we're still outside inside on the quarter. On the monthly chart, right? So here, this is the reversal signal we talked about many moons ago. Outside bar and down, and once you got that inside bar up here, there's your reversal on the SPY, and now we're going after that pivot high, and that would be the all-time highs. Okay, so there would be your all-time highs, and you have a lot of charts. If you look at the monthly charts, you look at a lot of monthly charts, a lot of stocks look like this or very similar like that. You have a broadening formation, we have a lower low, and you have this higher high, and now it's going from one side of the range to the other side of the range, and that's what you're seeing now. So the SPY right now, right, so there's your month of April. We went inside bar and up on May, and it's continuation, still going up here now. We're breaking above this trend line. Do we stay above there, or do we pull back in? That's the question. If we pull back in here, then you have to risk this, but you have the quarter way down here. So I'm thinking right now it's early June still, but we have a good month left of trading. So it's going to be hard for the sellers, to pull it back down and take it down this low here to flip the quarter red. So for now, the bias, as it's been for now, continues, as it's been for a while, continues to be up. So if you've been watching these videos, we've been biased to the long side for a long time, with with moments where we wanted to pay very close attention, because there were certainly some moments where the buyers lost control temporarily, but they took it back and re-exerted their control. So since this period here, this is one of those periods that I talked about, when we had this period here, it went inside bar up, and then it broke down, inside bar down. Inside bar up and down. That's inside bar reversal. But if you recall this trading week, the buyers quickly fought back and turned that week green. Then we had this quick week here. This is like 1, 2, 3, 4 weeks ago, when it did a break below that low, and then they bought it back again, creating a hammer. And since then, it's Momo up, outside bar up. This week again, close to 5% returns on the SPY. Momo up on the weekly chart. You want to be watching here. How long does this Momo last, right? And the Momo lasts so long as a low does not get taken out. So this week's low is now your range, your level you want to be watching here. And can you break below this low? If somehow the sellers can break below this week's low, that will be significant. You know why? Because this low is also, see that orange line? That's your monthly open. So if somehow the sellers can break it back down here and then break it below this low, then you have a weekly reversal that's also trading below the monthly open. So then you'll have a red month and a red week. So that's still, that would be important to see if you're a seller. That's when you start, that's when you get more aggressive. But you still have a green quarter, so you're still going to have these natural buyers who are going to step in because they've been conditioned to buy pullbacks. And to all truth be told, that's been the best strategy since the end of March, is simply to buy every single pullback. Why would you not, right? So that's the kind of type of market you're in now, where you don't want to necessarily chase price, even though the markets are going up, because intra-day and intra-bar volatility will stop you out. Intra-week volatility will stop you out. So ideally, you're buying pullbacks and waiting for pullbacks to enter into your longs, because the shorts have been getting run over, and you do not want to be trying to top pick this market, because it's still Momo up. It's going to go a lot further than you can think. If you recall last week's video, we talked about this being a tipping point, and it continues to be that way. We now have over 97% of stocks in the S&P 100 currently trading above the 50-day moving average. So things right now are priced to perfection. They have to continue to be priced to perfection. But if this, things start to wave a bit and weaken, and you start to see that negative divergence we talked about last week, that's when this, the bigger reversals come into play. Okay, so for now, Momo up, no point fighting that. If you look at the 2-day chart, it pretty much tells a story here. Here's your 2-day chart in the SPY. Look, we've been going Momo up now for some time. See that? That's May the 22nd. These are this is a 2-day chart, so each bar is 2 days. Momo up, inside bar up. This week here, these 2 bars and a half of this bar. At no point did we come close to even taking out any of these bars, par lows, to extinguish this Momo up condition. There is no reason to be getting short here. Maybe unless you're trading intraday, but on the bigger term picture, you do not want to be getting short. And even if you're trading intraday, you're probably even just better off just holding back and just timing your entries to get long and buying every single pullback, because that's where the easy money is. You don't have to time your trades as well to catch the shorts. The longs have just been working, so why fight that trend when the easier trade is to go up to the upside. So that is your SPY chart. Now we're just it's a waiting game. Just continue to keep that long bias until one of these lows, this low or subsequent low gets violated. That's when you want to see if that Momo extinguish or not, and can we trade below again that weekly or that monthly open right there. Okay, so that's the level to watch. Again, blasting right into highs there. Well, to recent highs for the SPY. The SPY does have a unfilled gap here now. This one here got filled this past week. We had run right there, right? So this one got filled. Actually, that was from last week. No, sorry, it was this week. Yeah. So this one here, there was a gap right here that got filled. We still have one unfilled gap right there. 333.48. So can the SPY get back up there, right? And continue this Momo up condition. Now let's go to our friend the VIX. How's the VIX faring? Well, if you know the SPY, how the SPY is doing, well, the VIX is probably going to be the mirror opposite, and in fact it is. So the VIX right now, look at that, continuation down. So inside month down, going into lows. On the weekly chart, it's a continuation of it's a Momo down, so it's the opposite of SPY. Outside bar down, inside bar down, right? Big red week for the VIX. Finally, people are beginning to sell off their take on less puts, out of the money puts. So there you go. You have a big 12% down week for the VIX, and it finally filled that gap. Man, we've been eyeballing this gap for a long time, right? We drew this one here, 29.82. It took a while, right? So remember, if you recall back here, we were talking back in March. I said this is going to eventually get filled down here. It took a while. It took it's close to 3 months. But that was the natural gap that needed to be filled, and you could see it a mile away, right? Because we were getting subsequent lower highs, lower high, right? That's a high, pivot high, lower high, lower high, lower high, lower high. Even that, there was a bit of a scare there. And I remember, if you recall that video, I said I was very surprised when they couldn't take out that pivot high. That there was 43. This one hit 42.86. It just showed you how strong the sellers were when they couldn't take out that pivot high. It looked very, very close. Very, very close. They couldn't do it. So that was it for that particular bit of strength, bout of strength by the buyers of the VIX, and they just faded ever since. So that day there, it started off, scary for the buyers of the indices, but they faded it right, not right away, but they faded it, and this turned into a outside bar up. Momo extinguished it right there. And boom, gone. Again, slow. This is chop. Remember, it's been quite choppy the past few couple weeks, right? Because this is kind of tight stuff. And finally, they gave it up this week. So there, your 29.82 level has finally been gap filled. We'll get rid of that now. There are some gaps up here. So if the VIX ever pops back up again, we'll just draw that gap. There is one here. Yeah, there's one right here now in the range right there. So we'll keep that one because that one's near term. And there's another one right here. I'm not going to bother drawing it. You get the idea. It's right there. So if it does pop back up this coming week, you want to see if it takes out that or that gap right there. Okay. So for now, on the weekly chart, just take a look at that again. I'll just redraw the range. Again, it's Momo down. So just continue to watch to see if this Momo condition gets violated or not. Okay. Or gets extinguished or not. Excuse me. So there is your weekly chart. On the daily chart, as we saw already. Look at this pattern we talked about last week, right? Inside, outside. So we're going to wait and see what's going to be the next bar. It ended up being on Monday and being an inside bar. So we like that sequence a lot. Inside, outside, inside. And then it resolves to the downside, right? So outside, inside, and down. There's your range expansion. Gap fills. Okay. And on the 2-day chart, basically the exact same type of sequence. In terms of an outside inside, but a little bit more consolidation. So here, outside inside inside. So 4 days of consolidation, right? We talked about that in last week's video. How are you going to break this? You broke to the downside. So you just breaks below there and boom to the downside. So there you go. So there's VIX. Now once again, just sit there and you gotta wait and see how that Momo gets extinguished to the downside. All things are pointing down right now for the VIX, and it continues to melt. The next level right there, 2668. Can you get back down here again? Look, this is the lowest the VIX has traded since back here, since beginning of March, right? So we're coming back into this area here at the beginning of March. We initially broke out of that outside of this of this range. So so this is we're getting back to the normal levels of volatility that we had prior to that big March crash. Okay, so let's go on to Qs now. This week there isn't going to be a lot to talk about because frankly things are going right into highs. It's all Momo up. All the charts pretty much look the same. There's so many stocks that are looking good right now that this is where it gets a little bit dangerous, right? Because you don't want to chase necessarily, even though stocks are flying to the upside, because eventually you're getting late in the rally now for some of these names. That's why tech this past week was actually a bit weaker than some of the other indices. Although it did have a good return, a good green week for the week. A lot of tech names. This is only up 2.7%, right? So look at that with SPY. Look at SPY. This past week was up. What do we say again? Is up 5%, right? Compare that to the Qs, which had been leading. Tech had been leading for some time. Is only up 2.7%. So some of the tech names that had been the leaders, they're already at all-time highs, or they're getting very close to all-time highs. And now you're seeing some natural sellers or profit takers go in there and begin to take profits and sell. So the tech is not leading as much this past week relatively as some of the other indices. So if you are going to be looking for longs, then a really good approach is to be a little bit contrarian and look to find some of those dogs that have not yet participated in the rallies. Think names like some car companies, some financials which people are getting back into now are still under owned, I believe. So these are a couple names here that will be interesting to continue to watch. So Qs, let's see how that is. We're at all-time highs now. So can you say this pattern has resolved itself? Now you just want to see how far it goes. Outside bar down. Once this high got taken out, that extinguished the momentum, and then eventually it took out that pivot high, and it did that this past week. So here on the Qs, this is what's remarkable. It is now Momo up. Okay, this is the quarterly chart, 3-month chart. It goes Momo up on that. So that is quite something. It would be hard to turn this thing red. It would be very hard to turn this quarter, all right, Q2 red. So this is what you need to be aware of. Anything if you are shorting, you're not looking for huge winners to the downside, because the chance of this thing coming back through there are very, very slim. Even if it's something narrative-wise or macro-wise very, very significant comes out, the best chance, as I said in last week's video, is to wait for next quarter, as you're going to have more influence, or the sellers are going to have more influence on the charts than what you're going to see here with such a strong quarter currently in place. So let's go back to our weekly chart. It's Momo up. Last week we had the outside bar, but now it's Momo up again. So outside bar here, Momo up. Let's see how far it takes the Qs. Let's redraw our ranges here now. It's Momo up, so watching our ranges to see how far this thing takes us. We did gap fill a number of levels this past week. Of course you did, because you're now at all-time highs. So the remaining gaps, we had 2 right there, both got filled this past week. So we're going to take those out now. Now we have a gap. We have a gap right there, and let's take this one here. We do have some gaps. Here's another gap there. That one did not get filled, and we have this gap here, which we can got filled, and we can move this one. Are there any more gaps here? Yes. Nope. That's it for that sequence. Actually, there's one right there. So there we go. So we have some downside gaps now, which makes it interesting. If and when the markets do turn around, these will be areas that we want to have to be watching for, because they will probably get filled if we get that big pullback that people are still wary of. With the elections happening in October, I think the VIX structure is going to change quite a bit, especially for the outside months, or the mid months, or the or later months. I think people are going to start buying insurance for those levels, just as protection from if you got in anywhere here and you're up big now, you want to be protecting those profits, and it makes more sense that eventually people are going to want to buy more puts to begin to protect themselves for potential downside risk. So expect the VIX to begin to pop back up again just because of that reason. Okay, so that's the Qs, and the Qs what can we say about this? Let's take a look at this here on the 4-hour chart. We're basically trading Momo up. Not Momo up, but we did extinguish some momentum to the downside on Friday. So on Thursday, we had a bit of a bumpy ride on the Qs, that is. Outside bar down. Was the world ending here? Did it look like it was going to end? Not really. Look at the strength of the trend here, right? The trend is not only, so it's not only Momo up, not only is the market's trending, but you have full time frame alignment on your side. So you have 3 very, very strong factors on why you still want to be long. I'll say it again. Momo up on the higher time frame charts, right? So outside bar up on many charts, on many time frames, excuse me. You're trending by basically by most, you can either eyeball it or just by looking at moving averages, whatever helps you see that we are clearly trending and people are buying moving averages, right? The moving average traders, they're simply parking their limit orders down here and they're getting filled and they're holding, you know, they're getting in on pullbacks to those moving averages. And thirdly, you have full time frame alignment to the upside. That means you're trading above the quarterly open, you're trading above the monthly open, you're trading above the weekly open, you're trading above all those levels. So for the most part, you know, it's very hard to get short here. So outside bar down, the extinguished Momo right there on Friday morning when the number comes out and it's very, very spectacular and people have that huge reaction and you're up 2% in the first 4 hours of trading. So for now, again, you know, going to highs here, you have to watch out. You don't want to be chasing necessarily, but it is trading Momo up on the day now for the Qs. So no point shorting that unless you know you're trading, you're scalping or doing a profit taker. So that's it for Qs. Let's go to Dow now. So DIA, Dow. Monthly chart, outside bar down, inside bar up. So that's, you know, this is very, you'll see a lot of charts like this one here. Again, our broad information is still in place to show you, you know, how that has played out. Expecting that to get taken out at some point, right? Dow's catching up very quickly, has had a pretty good week this past week. Momo up on the weekly chart, it's up 6.70%. You see that? So again, Qs are only up 2.7. Dow certainly outperforming on a relative basis. Momo up on the week. And for the 2-day chart now, Momo up on the 2-day chart. All right, so outside bar up, inside bar up. So Momo up again, just continuing to follow momentum. You know, it's not rocket science right here. Now it's just a matter of it's like playing chicken, right? So whoever swerves first loses. So at this point here now, that's what we're looking at here. Is you have to stay long until you don't, and that's the name of the game. Russell. Pretty much the same thing. Inside bar up on the monthly chart. Okay, so coming back, looking like it's going to come back up here to take out that prior high from January. This past week had a really strong week. It's Momo up as well on the Russell chart. So let's move our lines back in place here. This one was up 8%, right? So again, Russell outperforming. This is again that narrative, the idea that, you know, you want to be buying things that are under-owned right now, and certainly the Russell has been under-owned. The danger is that is that, you know, the Russell stocks, obviously they have you know, less fundamentals working for them, but there's going to be more beta and you're going to have potentially more upside exposure. But if there is a pullback, that's the first place they're going to be getting out. So, you know, you're buying maybe the crappier stocks, the stuff with less fundamentals and a little more speculative. You're going to get more bang for your buck. But if the narrative or the you know, the trend or the confidence changes, this is the place you need to get out quickly, because the Russell, it's for the past several years, when the Russell outperforms, it's usually not been a good thing, right? Because it's people chasing fast money. You know what happens to fast money? You know, these are the folks who get stopped out first, because this is where the speculators are. They're not sticking around looking for value here. This is the fast money. Okay, so on the daily chart, going into Friday, inside bars. It was very tight this week on Wednesday, Thursday. And then on Friday, inside bar up. Okay, so there's your inside bar up. You do have to watch out here now. You got a big gap right there. It was up 3.87%. We ended the day red. Break below here, Friday's lows. Potential inside bar reversal to take it back in here again. Okay, so on Monday, looking for that. Do we break below Friday's lows? And if so, do we gap fade this big gap here? And if that does happen, then that's something to watch out for. This gap did get filled here. There was an unfilled gap right there. We filled it on Friday. Did we fill it on Friday? Yeah, it filled on Friday on that gap up. There's now a gap here, right? An unfilled gap right there. I'll just draw right there. Put it in green for our daily. If we do do an inside bar reversal, that gap fill is very likely to come out the other side. Okay, so watching for that. Again, even that being said, you're still gonna have time frame alignment on your side. So in terms of the monthly charts, still right there, and you got the quarterly right there. So the month and the quarter still remain green, even if you gap fill. The only issue here is that if you open up high and you come back down, then you're gonna have one of those weeks where you're gonna have mixed time frames. Right, we've talked about that in previous videos. You can go back and watch those. But again, if you trade mixed time frames, it gets choppy because you might have a red week if it comes back in. Right, if you open high, let's say it opens up here, and all of a sudden it comes back to the range, creates something like an outside bar, or just goes up and then down. Then you have a weekly open that's up here, so it'll be a red week, but then you're gonna have a green month and a green quarter. So now you have some mixed time frame alignments there, and it could be a choppy week as things have to consolidate before things can begin. Maybe before they play out either to the upside or the downside with more time frame alignment. Okay, so that's it for the Russell. There's your inside bar up situation. Let's now talk about the TSX. So the TSX has been a kind of a laggard, very, very tight trading. But if you recall from last week's video, I said watch the weekly inside bar, right? So it was a weekly inside bar. So this looks a lot like the Dow. Outside bar down, inside bar up, up. So it's going up now. Okay, so back up to here. That's the target. Would be going back there. And on the weekly chart, sorry, it was 2 weeks ago we talked about the inside bar. It's right there, right? So I went inside, inside, outside, inside, and it's been a resolution of that. So you see a lot of this, where in equities, it certainly plays out this way, where usually you actually get sort of a soft reaction, I would call it, on the breakout, and it takes the subsequent bar. The second bar is when the actual buyers step in to really push things. People see the first breakout, so it's an outside-inside. It breaks above here, and you only have a small bar. People aren't that impressed by that move until you get the second bar, where all of a sudden people start paying attention and they come in, and you get that big bar. So this you've been seeing a lot with equities, where the breakout happens, people kind of forget about it because it's not a big mover, right? So remember, 2 weeks ago, not this week, but last week before that, I mean, TSX had done an outside bar and up, outside, inside, and up, but it wasn't anything to write home about. It was less than 2%, all right? But then this week comes up and they buy it right away from the get-go, and it's a big wide range bar that's green. So up 4.3%, pretty good for the TSX. So that's something you watch out for, is that once you break above the prior bar is high on inside bar, that signal is in force, so to speak. It's active, even though it's not moving yet. So long as it doesn't violate that prior low, that setup is still playing out, so to speak, and you want to be still paying attention to that. It's easy to lose focus on that because it hasn't moved yet, but the fact is that because it's not breaking down and invalidating the setup, you want to be paying attention to that. That's a good example of here on the TSX. So TSX now, there's your outside, inside, up, up, and on the 2-day chart, the 2-day, no, daily chart, yeah, it's Momo up. Here we go, Momo up, broke above the 200-day moving average. There's the 200-day right there. We had double tapped it this past week, and then now we finally had a close above the 200-day. So that's going to get a lot of investors back into the game because that's what people are waiting for. They're waiting for that close above the 200-day. Very popular adage there. I am curious about the SPY. I think the Dow did the same thing. Yeah, so here's the SPY. Again, just the observation, right? So this is 2 weeks ago. This week, last week, and 2 weeks ago. Right, so it broke above the 200-day moving average. You recall how it tested it? Remember these videos back in April? We're testing the 200-day. It breaks above it here. It holds for 1 day, closes below, and for the rest of the week, it's closing above the 200-day. Look how it's testing that 200-day right there. It's even testing the weekly open. That's even more significant. Then it doesn't look back, right? It's gone at that point. The Dow did the same thing right here. So last week, recall the test, right? So there's your test, because it pulls back in. Then this is your Friday. Then on Monday, it breaks above that bar. That means they're immediately going to go after that on the next day. That's what they did, and it's gone. So let's now talk about emerging markets, because that's been a really, really good sort of canary in the coal mine. Even with all the potential trade war talk, trade war and the falling part of some of these the potential fallout of trade talks or negative trade talks, EM has been a really, really good canary in the coal mine, because right now the emerging markets ETF is shrugging off any of that negative fear or worry. Outside bar down, there's Momo down until April. We had an inside bar, and then May, inside bar up, extinguishes the Momo, and now we have a big month of June. Pretty much, here on the week here, we had a tight week last week, right? Inside week, and then on Monday, gap up and gone. Big 8.4% week for EM. A good start for the month of June. So just like we said before, I'm just going to repaint this here now because that's the range. How do you get outside of that range? It's next week. That's what you want to see. But here, inside bar up, right? So this doesn't do anything this week. Recall, when we were watching that, that's kind of uneventful. But the fact is you did break above that pivot high. Okay, so that's something to understand, is that you did break above that pivot high, and until the sellers can invalidate the buyer's strength, the bias to the upside because they took out one side of the range. So here it continues, even though it's a red week, but there are no lower lows, right? So the lows are what we're always watching them to see who's in control. The sellers continue to be unable to take out that prior low. Then last week, right, inside bar, consolidating right there, and gone this week. So there's your emerging markets. And when I say it's a canary in the coal mine, what's interesting about the EM is that every morning, EM obviously will gap up or down based upon, not every morning, but most mornings, EM will gap up or down based upon the events of what's happening in Asia. And right now, that's you'll get a quick indicator of where people are putting their money. For the most part, the EM has been gapping before the market opened, and it tells the tail for the day. So on Monday, it gaps up, and pretty much the North American markets follow. Tuesday gaps up, North America does the same thing. Wednesday gaps up, and we trade up all day. Thursday it actually gapped down, and then Thursday was a weak session for the Qs. And on Friday it gaps up, and it's we know what happened on Friday it was gangbusters to the upside. So EM has certainly been maybe a speculative vehicle. People are putting money there, and they're making their bets that way. So there's your EM again, weekly up on the chart there to see if there's inside bar reversal to the downside to change things around if you want to see a selling reversal. TLT, does that mean if the risk is on? How's TLT doing? Well, risk is off. Risk is on, so they're getting out of bonds. So the outside, inside, down is now starting to really play out here for the month of June, right? So minus 4.5% already for the month of June, the first week of trading done there. And here's the same thing again. This is like kind of a interesting observation here. Is it's kind of a slow boil, right? So when you have that inside month and down, the month of May seemed uneventful, right? Because it closed basically inside of April's range. But because we had taken out that prior low, the sellers were more in control. We've always said the sellers have more control here because they were able to break that range, that prior low, even though it closed inside that range. And this past week, it's a continuation of that, expecting that pivot low to get taken out here now. Right now, though, you're trading inside, March's range. So even though you've had a bit of selling here, it's still a large inside quarter. Okay, so we still got 1 month left, but you still got a lot of a lot of range here if you want to take it all the way back down here and create that inside bar reversal. So that's what to watch for on TLT. And here's the interesting thing here. Now you can see clearly we got this broadening formation, right? Now we're coming back in here, and it tagged it. So it tagged this pivot, the upper trend line of that broadening formation. Does that act as support or not? Right now we did get a little bounce off of that. This happens to also be the 8-period moving average on the 1 month chart. It did bounce off of that area, a little bit of a confluence area there. This bounce off of that and find some support, or we cut through it. If we cut through it, we'll come back through the range here. That's what you want to watch for. How strong is this bounce? On the daily chart, it looks like this. So on the daily chart, they did buy it back, right? So it did end the day green, but did not do enough to get inside the prior bar's range. So we want to watch and see now, because there's an unfilled gap right there. If the buyers step up on Monday, that's what you're potentially looking at there. If you can fill this gap, there's potential for this thing to go further. Unfortunately for the buyers of the TLT, you got a lot of time frame misalignment, because you got the monthly open right here, you got the quarterly open right there. So it's a very, very uphill path for the buyers of the TLT to try to push this thing back up to the range again. So they might try to do a little bounce to gap fill. There's another unfilled gap right here. But that monthly open and that quarterly open are going to act as natural levels where you're going to find sellers step back in again to keep the month and the quarterly red. How about gold, MGC? How are we doing in gold? Well, a lot like TLT. We saw some selling, some profit taking. But still, on the bigger time frame chart, the 3-month chart, it's still maintaining its gains. So the past couple of months have not been kind to gold. Certainly the trading has gotten a lot choppier, but on the higher time frame, things are still trending upwards, right? So Momo up on the quarterly chart. So this is a fairly big, big range to work with. Well, it's actually been pretty tight trading. So, even though it's, you're still trending upwards, it is tight trading in this bar here. So on the monthly chart, we finally go Momo extinguished. So we had Momo up inside, and then this past week we did break below May's lows. So that extinguishes that Momo right there. Okay, so now the sellers on the monthly chart have taken over control, and on the weekly chart it kind of shows it because you have an outside bar. You had a slight higher high. That looked like a bullish hammer last week. It started the week off that way, but you quickly broke below the monthly and weekly open, and the sellers took over and were able to end the week basically right at the prior week's lows. Okay, so on the daily chart, this is what we're talking about here, is that if you start the week high, okay, so that's your monthly weekly open, that orange line. If you start the week high, if you give it up, then you're going to have natural sellers stepping in anytime you try to push it back up again. Monday, you open up high, you trade a bit higher, above Friday's highs, and then you come back in. So now on Tuesday, if you break below that low, it's very difficult to change things around now, because you have a down bar and you're trading below the monthly weekly open. So how do you turn this week green again? And that's a real difficult challenge, and they were not able to do it this past week. Inside bar down to end the Friday now. You need to see, if you want to see the buyers begin to step up, you got to see some sort of inside bar reversal on Monday. Otherwise, you're going to maybe drift lower here, as you do have some mixed time frames. Red month, red week, and then green quarter. So we have some range here where it could just begin to chop around. Bitcoin. How's the Bitcoin chart faring? Still moderately bullish. It's not moving very quickly, but the charts are pointing to the upside, but it is tight trading. So here on the 3-month chart, you have this issue. So you only have 27 days left in the quarter, and you're still at this point outside inside. So a lot like the SPY, a lot like the Dow, you're outside inside. Can you break outside of Q1's range to create a Momo condition? That's what you want to see. If you crack 10,491, that's really the level. Even if you crack above it, you may not see the instantaneous reaction. You may take, like we said, a slow boil before things really get rolling. But that's what you're looking for now. Does it go outside and up to create the momentum condition on the quarterly, or does it stay outside inside on the quarterly? And that means the monthly will stay kind of tight, because you can see these bars. You have to get above that red line in order to go Momo up. And you can see the sellers came in there. They did not let that happen, right? So the sellers did not let that happen. And we have a small bar now, relatively speaking, a small bar compared to the prior weeks. So you have a bit of consolidation, a bit of range trading happening here now with BTC. So on the weekly chart, you have this sequence. Kind of choppy, right? Because you have the inside conditions going on there on the quarterly, and they're not letting you, they're playing inside that range. Outside up, then it goes bar down, and then it goes bar back up again, turning to a bit of a shooting star here now. But you're sitting right at the monthly weekly open. You got the quarterly green. So there's nothing really with Bitcoin. There isn't anything that's really compelling at this moment that really gets me interested in Bitcoin. Just for full disclosure, I'm not long Bitcoin at this point. I'm long a number of other cryptos, but I did take profits into this little spike here. I actually accidentally took some profits in this spike, so no longer long Bitcoin on a trading basis. Obviously, own Bitcoin on a longer term account, but not in this trade right now, as it's nothing compelling for me at this point. So BTC, there you go. 2-day chart, kind of setting up something, but what's it going to be? I'd rather see it break to the upside, just because that would have full time from alignment. It makes the trade easier. But the downside, it could be an interesting quick scalp if it breaks this pattern. Outside, inside, inside on the 2-day chart. How does it break this range? If you break below to the low here, or break below this bar's low, if it closes out like an inside bar, then you could possibly turn the month and week red here and challenge this area down here. The problem is that you do have a pretty green quarter, and so that would be hard to change that. Like back here, it looked like it was a big sell-off. It really wasn't. It was down 10% for that week, but the buyers bought it right back again, and now that's a distant memory, right? That anyone who got short there probably got stopped out on this sequence here. You can see it's tight trading because just by seeing the visualizations there of the Bollinger Bands, you can see they're coming in, right? So they're narrowing. That means the trading is getting tighter and tighter. So for me, it's not that compelling right now, as price is just consolidating and I'm waiting for that to resolve in one way or another, maybe setting up an interesting pattern for us to look at. So for now, again, I'm watching how this pattern resolves, but for me, not high conviction either way. So let's do our fast fires and we'll wrap things up today. A bit of a quicker video, as really there's nothing to do except for follow price at this point. Try not to get cute, just follow the follow price is telling you. So let's talk about some interesting charts for the coming week. Now, NOW, software company. So outside inside on the weekly chart, this one here, has been consolidating this past week. Let's see if we can go bust into highs here now. The monthly chart looks like this. So you got an inside month so far, but you're going right into highs, right? So that's all-time highs. If buyers begin to step back into the queues into tech, these are some of the names they're going to bid up. So now it looks interesting. You have a number of former high flyers that took a bit of a week off, like Shop, right? So Shop has been on a roll, now came back a little bit outside inside. How does it resolve that pattern? Same thing with Twilo, another software company, high flyer, hit all-time highs a couple weeks ago. So now outside inside has resolved that pattern. Nvidia, same thing, high beta name, semiconductor space, hit some all-time highs already. And now, how to get outside that outside inside? Is this more profit taking outside inside, or they break it above here and it goes really gangbusters to the upside and people get really, really FOMO driven? Look at the monthly chart for a second. Let's look at some names there. So here, Chesapeake. So here's a name we talked about in the past. This thing has been going into lows for some time now. Why did I want to show this chart? It's Momo down still, so we do have a first green month here. We did break above this prior bar, so that's interesting now because CHK actually has a bit of a monthly reversal, first time in a while. So CHK could be looking interesting here. This, to see it as perhaps a bottoming process. You look at the daily chart, man. This chart is so small, it's hard to see it, just based on how squeeze it is. But Friday, look at the volume that came in on Friday. Momo up. On Friday, it was up 76% on Friday. So maybe some volume coming into that, and could be an interesting name there. Back to the monthly chart here, WLL. A lot of these dogs are finally starting to and like I said before, you may want to start looking at these names that are under-owned. Because that's where the market's going now. They're trying to buy up the junk, right? Because everything else is already blasting into highs. So here now, if you're short this, you're gonna have to cover, right? So you've had an amazing ride if you got short anywhere in this sequence. But now you may want to start thinking about profits, otherwise they're gonna disappear on you. So here, outside, inside, and up on the quarterly chart, monthly chart, and then that has some range to go after there. It's only $1 stock now. It used to be a large stock. Now trading in the single digits. IQ, interesting on there. So on the weekly chart, let's do it this way. On the weekly chart on IQ, you actually have an outside inside that's playing out already to the upside. Expect that weekly high to get taken out, and that would also get more interesting because you actually have a double inside month right now. Inside month, currently inside month. If you take out that high, there's more room for IQ to head higher. We talked about this chart last week, so I'll continue to watch IQ. There's a lot of charts that look like this. So WFC, so banks, like I said already, maybe under-owned. A lot of banks look like this here. This is a monthly chart. Outside bar down, look at that. Inside bar reversal back to the upside. They take out April's highs. So see a bunch of names like that for financials. TRV is another example of one of those. Inside bar down, and look what happens when you take out that pivot high. They come right back to the range. Look, this past month, This past week, up 16% for TRV. This is Travelers. This is an insurance company. This is, you don't see these kinds of returns. We're talking in insurance names. Another high flyer, Boeing, right? So that's another one name that's been getting beat up, but finally Boeing getting some good news. Look, inside bar down, right? There's your inside bar reversal, and Boeing up 40% this past week, right? So 40% for Boeing. We do have earnings in July, but that's been an amazing return on a ride for Boeing. ATI, interesting name there, right? So steel play. So Allegheny, inside bar down and up on the monthly. So you can scan your universal stocks. There's pretty much all of these have worked inside bar down month and back up again to take out the April highs. Tech data, another example of that. Inside bar down, just about the trigger. So this one hasn't happened yet. This is one you want to put on your radar, because this one here now, a bit of a low flyer in terms of it's not a very volatile name. It is a software, services company. It provides software to companies. Reseller, excuse me. Inside bar down. If you break above that pivot high, you're going after there. Feb's highs, maybe all-time highs in play. Now let's talk about stars and dogs. So let's do a few of these now, and we'll wrap things up. The dogs this week. Where's money not going into? Where's the money flying out of and flying into? MDB. Rough earnings this past week for MDB. So we had a bit of a selling in MDB. So that will eventually be probably a name that's going to be a good buy at some point. But had a rough week. Had been trending very, very well. And then, this past week after earnings, got sold off. Silver names. So, wow, they got beat up badly. WPM, so Wheaton. Now, people do not. We talked about the MGC already, the micro gold futures. But, yeah, this past week, the trend on WPM certainly weakened significantly. We had a lower high there. And then, yeah, people sold it off. Momo down now on WPM. SMAR, so software company, they missed earnings. Or earnings were not what investors wanted to see, and they had a couple of rough days. Again, had been trending very nicely, but if things are priced to perfection, if you do not meet or exceed expectations, these are the kind of reactions you get. Down 23% in one day. That's the possibility now when things get priced to perfection and we don't meet expectations. Bonds we talked about already. Man, this is starting to trend downward. Got TLT, right? Boom. So there's your TLT trending stronger to the downside now. But we did get that, that green day on Friday. So we do want to see how this level here, that Broadening formation support line, holds. And one more name, Octa had been a real high flyer, one of the four horsemen, in terms of like these tech names, internet names. And that had been trading really, really well until earnings here now, and then Poof, the last 4 trading days, kind of tough for Octa. Again, maybe setting up again, because this is like a backbone of the internet. So see if how that plays out. But right now, the trend weakened. Not saying it's a short, but the trend weakened, and that's where we saw money leave this past week. So interesting names. Let's go here. Wuba. So we said last week the Chinese ADRs. Even though Trump had threatened to make life tough for some of these companies, Wuba had a strong week. I think a lot of Chinese ADRs had strong weeks. So here, Wuba looks unimpressive here, right? But it had been going Momo down until last Friday, right? So remember, Trump's speech last Friday, it goes inside bar down. Look at Monday, inside bar up, inside bar reversal, to the upside. It's been trending back up again, sort of weakening that downside trend. Here's what makes Wuba very interesting. Look at the weekly chart. Okay, so there we actually have a reversal on the weekly chart, and on the monthly chart, you have an inside month, double inside month. If you can pop above that high there, you're going to potentially go back to that pivot high there, because that's in a Momo condition to the downside. You might get a Momo reversal right there, back to the upside. Another Chinese ADR name that looks interesting is Bizun. Inside bar reversal to the upside, so strong trend to the upside here for Bizun. GoGo, another strong trending name. Hit a bit of resistance there on the 200-day, but had a really strong week. Some of the dogs in play, airlines, right? So that has been, those guys have been rocketing. Hit the 200-day, people did take profits there, right? So you can see they had a phenomenal 2 days, up 41% on Thursday, and then still up 11% on Friday. Apple going into all-time highs. Looks like it will go at all-time highs. Trending strongly. Trending very, very strongly. You can see pretty much just picking up that 8-period moving average has been a winning strategy there. Another name, these oil companies. So Noble. Look at that move on Noble. It basically broke that downtrend, and on Friday had a big 75% return. Look at the strong volume there. That could be day one of something big for Noble. And finally, Macy's. Retailers, maybe things are turning around for some of them anyways. Macy's, wow, what a run it had this past couple weeks. A bit of a weakness on Friday. It did close the day red, but man, it was a strong showing for Macy's this past week. So that's it for this week's video. Once again, I want to thank you for joining me this week and every week. As always, if you like the videos, give it a big thumbs up. If you want to know exactly when these drop, then you can subscribe to the videos on YouTube or go to the blog, tradingedge.org. Sign up for my weekly newsletter. Drops on Sunday evenings. Comes out with I drop the video in there, as well as some of my trading perspectives. And as always, if you have any questions about the videos, feel free to leave them in the comment section on YouTube or on the blog page. I do my best to check them and respond. Maybe I'll even respond to some of your questions in the video. So I wish you a good trading week. Continue to stay on the right side of the trend, even though it's very tempting to try to take the opposite perspective. But at this point here, the markets are not showing anything price action wise that tells you to try to call that top. Okay, so again, have a great week, happy trading, and stay safe. All the best.